The index at the day's high, a sharp rebound in the mid and the small cap indices and a slew of earnings coming in. It's a great time to begin Midcap Radar on CNBC-TV18. I'm Armas Fatakia. With me as always is Vivek Iyer. Vivek, good afternoon. It's some relief to see green, particularly in the broader markets, but we are counting down to some very, very major events.
Absolutely right, Hormaz. Good afternoon, and what a great session it's been, especially as far as the broader and the markets are concerned. Whole host of results are hitting the screen, and there are very sharp, at least in the last half, a very positive reaction to the earnings names like KPIT Tech and Indian Bank, as you can see at the bottom of your screen. But we have quite a lot lined up on the show for you. Let's start off with the top headlines. Stocks climb, led by midcaps following a recovery in US equities overnight. Industrials and IT are the big gainers, while FMCG drags.
Acme Solar gains after reporting its third quarter numbers. Revenues gained over 5%. EBITDA also surged on a year-on-year basis. The management told CNBC-TV18 that they will add 450 megawatt capacity in the next 2 quarters.
SBI Cards sees short covering after a weak set of numbers in Q3. Credit cost at 9.4% is at a 14-quarter high. Net interest margin is at the lowest level in 19 quarters.
AGI Greenpack is under pressure today after the Supreme Court rejected the company's resolution plan for Hindustan Natural Glass. The stock is down 17%.
KPIT Tech surges on the back of its Q3 earnings. Net profit up nearly 21%, while revenue surges 18%. The company raises its FY25 margin guidance to 21% plus.
At the highest point of the day is the index now 23,160 is where we currently stand. You're counting down to the monthly expiry tomorrow, but the numbers of Indian Bank were just flashing on your screen just a few minutes ago, and the stock has now surged to the highest point of the day after its results. There was some improvement seen in its asset quality on a sequential basis as well, so that too has contributed to the result reaction there seen in Indian Bank, now 5% higher on the stock after its results. A positive earnings reaction also seen in KPIT Tech. That stock too had surged almost 7.5% after the results announcement, the management raising its guidance there. But the key takeaway now, the stock is now 10% higher. KPIT Tech has some very sharp moves seen in the stock.
The upper circuit freeze,
almost, yes, it's an upper circuit for
KPIT
KPIT Tech. So a very positive reaction coming in from the street after the management raised its guidance. But there is a whole host of other movers in the broader markets as well, and Vamakshi is joining in to take us through that. Vamakshi, good afternoon.
Well, good afternoon, Hormaz. The mid-cap index is doing quite well. There are more stocks that are advancing than declining in trade today. Let me first start off with the stocks that are up and away in trade today. Inox Wind is seeing the biggest intraday advance since August. In fact, Credit Access Grameen also features on this list. That stock is higher by almost 11%. Netweb is another counter that we're focusing on. Keep in mind that over the last couple of sessions, this stock was under a fair bit of pressure, and today it's seeing a good recovery. In fact, this is the biggest intraday advance since its IPO. Apart from that, Linde India is another counter that is seeing very strong gains of almost 12%. In fact, this is the biggest intraday advance since August 2021 for Linde India. Apart from that, several stocks reacting to the numbers. Ixigo is up nearly 12.5%. Syrma SGS Tech is now locked in that upper circuit of 20%. Suzlon Energy too locked in upper circuit of 5% since morning. JM Financials reacting negatively to its numbers. That stock is down nearly 4.5%. When you look at some of the top losers this time around, very few names, but it's important to point them out as well. Jupiter Wagons is down nearly 5%. Apar Industries, keep in mind, yesterday was down on a weak set of numbers, and today the stock is seeing further pressure, down nearly 2%. Intellect Design Arena is another counter that is down and out in trade today. Lastly, let's also focus in on some stocks that are moving, accompanied with very strong volumes as well. That list features Schneider Electric. NMDC Steel is another counter that is up 9.72%, close to the highest point of the day. Anand Raj again had been seeing a tremendous pressure, in fact had lost 40% since its recent peak and is up nearly 9% today. Keynes Tech is another counter that is up nearly 7.5%.
Thank you so much, Vamakshi, for joining us and giving us a list of stocks, especially in the broader end of the markets, that are buzzing in the session. Well, if you could just pull up a few charts as far as Midcap IT stocks are concerned. After the results of KPIT Tech, remember they upgraded the margin guidance. That stock is now up almost 9.5%. Along with that, names like Mphasis, Cyient, these are the stocks that are recovering in tandem with the results that have just come from KPIT Tech. But it's time now for a short break. Management of eMudra joins us next to discuss their Q3 earnings and more. Welcome back to Midcap Radar. We have the management of eMudra. It's the first management on the show. The stock is under some pressure today. Company reported a weak set. To discuss this and more, we have Venkatraman Srinivasan, Executive Chairman at eMudra with us. Thank you so much, sir, for joining us. Just hold on, sir. We apologize. We have the results of Maruti that are just flashing at the bottom of your screen. It's a net profit of 3,525 crore, which favors or comparably favors when you're comparing it to our poll, which was slightly lower at 3,474 crore. The stock now near the day's highest point at 12,231. Revenues, when you're looking at it, once again, over 38,490 crore versus a poll largely in line. In fact, a slight miss, if you could call it that, a 300 crore miss as far as the top line is concerned. We are waiting for the EBITDA and the margin numbers. Remember, we do have the volume figures as far as Maruti is concerned. And earlier, at the end of H1, Maruti had guided the moderation as far as PV segment was concerned, especially for the second half of the rest of the year. But the numbers compared to the poll compare quite favorably. In fact, how much you want to say?
The EBITDA figure as well, right? 4,470 crores. That too is in line with expectations. There is nothing that is beyond what the street was anticipating for Maruti. Well, the revenue figure is a marginal miss on expectations, if you could call it that. The net profit is in line with expectations, as is the EBITDA figure. The average selling price and some other factors. The investor presentation is what will be keen to watch out for. The volumes for Maruti were up 13% on a year-on-year basis. They increased by 5% sequentially as well. So we'll watch out for some of the other numbers, and the margin figure there at 11.6% compared to the CNBC-TV18 poll of 11.4%. So absolutely in line with expectations.
Well, we have Prakash Diwan joining us on the phone line to discuss Maruti's numbers. Welcome, Prakash. Thank you so much for joining us. What's your first take as far as Maruti is concerned? We knew the volume numbers, but there were worries as far as the realization was concerned, right?
This has been a tough quarter for most players, and especially after, the onslaught of electric vehicles. Maruti was struggling or was expected to be finding it difficult to grow realizations. But I think these numbers are definitely very comforting. In spite of all the in terms of wholesale numbers growing and all, this will set expectations right, and it's just another normal quarter of growth and not a hyper growth that was being penciled in from the wholesale numbers. So this sets the tone for them to probably close the year by March with decent numbers. But there's nothing very spectacular about the earnings, but at the same time, there's nothing disastrous about the earnings as well.
Nothing spectacular, and that's showing in the stock as well, right? It's cooled off from the highs of the day. Now it's slipped into the red now has Maruti. But Prakash, good afternoon. What would you like to hear from the management when they address the media after these numbers that have come in on the road ahead, their electric vehicle plans? Because there is competition that has been launching electric vehicles left, right and center. What would you like to hear the management?
Oh, absolutely, Orma. So while they are late in the day to come in the EV segment, and the likes of Mahindra and Tata have really marched ahead with very tried and tested products. And remember, the rollout of electric vehicles is anyway still some time away. It's June when you'll see them on the road, and things will start perking up. I want to hear from the management in terms of what is their focus on product launches in the IC category also, because they've not had any new launches after the Fronx, and that's done well for them. Are they deepening that portfolio? Are they getting into more variants on the SUV side? So that is something where utilization levels of such a big capex that they've done will also start kind of getting some visibility, and that is what the market would like to see, so that return ratios start improving now that the investments have all been done, and how quickly things start looking up in terms of utilization. So I would want to hear that, and that also means that realization trends will probably be better and favorable. So that's what we would like to hear from the company.
Right. Interesting.
Well, we also have Naveen Kulkarni, Chief Investment Officer at Axis Securities, joining us on the phone line to discuss Maruti's numbers. Naveen, I hope you've had a chance to look at the numbers. Well, the margin numbers too are out. How are you looking at the numbers? Are you satisfied with the margin profile? And what would you want to hear from the management later on?
Yeah, so looking at the margin performance, we were expecting margin to be a little lower than what Maruti has reported. So that's a positive surprise for us clearly. So 11.6% margin compared to our expectation of 11.3%. So the margin number is definitely better. Also, the PAT growth is better than our expectations. So overall, I would say that considering typically in auto sector, the auto numbers are out before the results, right? So revenue numbers are generally in the expected zone. The focus typically during the results tends to be on margins. And considering that we were expecting higher discounting, higher advertising expenses, all those factors put together, Maruti still has managed to report a good set of numbers, which is beat on our expectations. So I would say that these are good set of numbers for Maruti.
Yeah, good numbers, Naveen, but would the street be happy with just good, considering the situation that has been going around? More importantly, the stock has run up as well, right? It's up around 13-14% in the last 1 month. Does that do anything, or do these numbers do anything to tweak your estimates on the stock?
So I will have to listen to the conference call and figure out what could be the upgrades or in terms of the earnings. But see, overall, if I were to look at Maruti from a little longer term perspective, Maruti compared to many of the other auto stocks has not been a top performer. It has done well in the recent couple of months, but that also is to do with valuations being quite reasonable, numbers being good monthly, right? So there's a lot of operating metrics which are supporting the run up in the stock price, right? So I would say that going ahead, of course, the focus will be on new product launches and maybe even electric vehicles segment, what they will do in that, right? So those will be the areas of focus. But I would say that as long as the monthly numbers continue to remain at decent levels, I think Maruti should continue to perform from current levels.
That's right. Thank you so much, Naveen. Thank you so much, Prakash, for joining us and giving us your first take as far as Maruti numbers are concerned. Maruti has cooled off and now trading near the flat line. But going back to the management of eMudra, remember the stock is under pressure today. We have Venkatraman Srinivasan, Executive Chairman at eMudra with us. First of all, so apologies for making you wait. We just had the numbers of Maruti that flashed on your screen and we had to address that. We understand that there was a one-off impact on your margins in this particular quarter. What led to that particular impact as far as EBITDA margins was concerned? And Q4 and FY26 onwards, do you expect that to revive?
Yeah, there are 2-3 aspects which are there. One is because from July 2024, the Controller of Certifying Authority has passed a new model of sale. Before that new model came, we were selling the stock and a lot of stocks were in the market. So gradually those stocks has to be absorbed back because now they have prohibited the stock sale. So that almost affects almost to 3 crore per quarter. This is one thing. And the other thing is the stock option. Though we have a stock option trust and all the shares, whatever stock option we are giving that were transferred to the trust, whenever we give, we have to make a provision for that. Also, it is just debited to profit and loss account and credited to reserves kind of thing. So all these, then we did one acquisition. So in that, some portion of the consideration got deferred. So that deferred consideration also, they calculate interest. The consideration itself deferred, but as per Ind AS, that some portion has to be attributed to interest on the deferment. So all these kind of things almost impact some 5 crore in a quarter. So this is one thing. Then the second thing is generally this Q3, Q2 is a seasonal quarter. So where the digital signature sales are very high, Q3 is a non-seasonal quarter where the digital signature sales go up. So these are the things which has impacted the current quarter. But still, if you see, the growth has been there compared to the last year Q3. And out of that, the organic growth itself is 25%, balance 15% inorganic growth. So that way the growth has been there. The EBITDA margin again, if all these things are taken care of, it will be nearer to not EBITDA margin, net profit margin, maybe around 18 to 19%.
By when do you expect? Right. Mr. Srinivasan, by when do you expect this to normalize, sir? These ESOP costs, the provisions that you are making for them, and the interest as well with regards to the acquisition that you have made. When does all of this normalize for the company to return to the normal growth trajectory?
It will take another 2 to 3 quarters. So mostly by September, it will normalize.
Right.
Okay.
September of
So,
2020. Yeah.
Mr.
After that,
Srinivasan.
gradually it may reduce, but will completely go off in September.
Okay, Mr. Srinivasan, correct us if we are wrong. At the start of Q1 or at the end of Q1 rather, you had given a revenue growth guidance of 25 to 30% for FY25, EBITDA margin guidance of 30%, which we believe may be a couple of quarters away, and net profit margin guidance in the range of 18 to 19%. So what is the revised guidance for all three of these key metrics at the end of Q3?
No, the 25% revenue growth, more than that will be achieved. Because if you see, last year we were 375 crore. With 25%, we should have gone to 470 or something. Today, we may achieve around 510 to 520. So that is where we can go. Similarly, the net profit margin, again, when we gave this 18% was on the old model of sales, where net sales we were making. Now what is happening, we have to make a gross sale on digital signature and pay commission. So that also a little bit improves the turnover. And again, one more aspect came this year is the income taxation in Dubai. With that, we have already told instead of 20%, we will come to a net profit margin of 18%. So if you remove this one-off cost, we will still be at 18%. With all this one-off cost, we will be at 16 to 16.5%.
One final question from my end, Mr. Srinivasan. What is the India to international revenue mix for the quarter? And there has been a lot of emphasis on the North American market as well. If you could share numbers on the mix and where do you see that going forward? And if there are any more acquisitions that you have in the pipeline?
International is gradually growing more and more compared to India. So India market this year, because the DSC sales is also lower by 5 crore. The total India market sale was around 42 crore or something like that. The balance 94 crore came from the international market. And the international market, our penetration is increasing because, for example, we have gone deeper and deeper into Philippines and Malaysia, then South America also we are going more deeper. Then Europe also we want to go. So India market maybe at best 10% growth or 5% growth year on year can happen, but international market can go in a bigger way.
Thank you so much, Mr. Srinivasan. We understand that you're likely to exceed the guidance for the top line as far as FY25 is concerned. Wish you the best for Q4 as well as FY26. Well, the next management on the channel is MapmyIndia or CE Info Systems. It reported its Q3 numbers. We are joined by Rakesh Verma, Chairman and Managing Director and Co-founder of MapmyIndia. Thank you so much, Mr. Verma, for joining us. First up, Q3 growth, especially as far as the top line is concerned, is much stronger compared to the 9-month run rate. What led to the strong growth if in Q3, almost 25% versus the 9-month growth of close to 17%?
Well, thank you for having me on the show, on your show. The Q3 growth has been fueled by what we call consumer and digital transformation and the enterprise part of the business. We have C&E and we have A&M. In the C&E, we have seen a 37% growth, and that was made up of a couple of reasons. One definitely was signing up with a global giant where we earned a good chunk of revenue in the social media. So altogether, the Q3 results were good in the sense that we could achieve a 25% growth. Now, the 9 months growth of 17%, we are hoping that, not hoping, we are pretty much confident that we will have a 25% growth of the whole year when the year ends in March.
Mr. Verma, so based on what you're saying, you're expecting to end the year with 25% growth, if I heard that correctly. So yes. Do we anticipate a better quarter, if a similar quarter in Q4, if not better, as Q3 was?
Better, I guess.
Better. All right. I'd get to the margin bit as well, Mr. Verma, because your margins were impacted during the quarter on a year-on-year basis as well, particularly with regards to the overall business. You had margins of around 36.5%, if I read that correctly. Where do you see that number by the end of the year?
We see it not worse than that, maybe a little better.
Okay, Mr. Verma, a couple of questions. You have two segments of your business, if we could broadly classify it like that. The map-led business, close to 75 to 76% of the total top line, actually saw 33% year-on-year growth. So in this particular quarter, did you see the full impact of the Hyundai-Kia partnership that you have? So is this the new run rate as far as that particular segment of the business is concerned? FY26, especially for that particular segment, what will be the growth rate? And for the other part of your business, especially as far as the IoT business, we understand that it's a lumpy business, but this particular quarter has been quite subdued. Q4, can that bounce back?
Okay, let me first address the IoT thing. In the Q3, we didn't have that good growth, no doubt about it, because two major businesses that we were hoping to get and convert it into revenue has gotten postponed by few quarters. Not that they're gone. So we will get the benefit of those in the next financial year. Coming to the map-led business, yes, our growth is happening, and map-led business is the high margin business in any case. So we are definitely focused on the map-led business, while IoT business, we are investing to add to the overall growth of the company.
A quick final question, Mr. Verma. There was a lot of chatter last year when you had announced that decision to invest 10% stake in the B2C venture floated by Rohan Verma, and then you had reversed that decision. But Rohan Verma is going to be stepping down as the CEO, right? Is there a succession plan in place? If you could share some more clarity on that. And does this decision now to not invest in that B2C venture stand for good?
Well, let me answer the last part first. The B2C business at this point of time, we certainly believe that since there is a large market in the B2B and B2B2C, there is no need to move into the B2C business. But let's not confuse a Mappls app with B2C business. We consider, and we have considered very clearly, that Mappls app is an integral part of our B2B business. It doesn't give us revenue directly, but indirectly it supports our B2B business. Coming to the succession is a very complex issue. It's nice to have a succession from within the family to lead a company, although the family owns only 52%, remember that. But as far as the way we structured it 3 years back itself since IPO, that our entire business leadership is in the hands of four capable and qualified business leaders. And they are running the business with the guidance from whoever it is, whether it's me or Rohan Verma. So selecting a single CEO other than Rohan Verma will be a different challenge, which we'll see over the next 3 years.
So by when do we see a new CEO, sir? Very quickly, if you could answer that.
At this point of time, for over the next few years, we don't need a CEO as long as the business leaders exist. They are there, and I'm also available.
Thank you so much, Mr. Verma, for joining us, talking to us about the prospects of the company, as well as the succession, as well as the leadership issue. Well, it was an action-packed show on Midcap Radar. We'll take your leave now. Your stocks when we return.